guys. So this week we've had Australia raise interest rates and have a pretty strong GDP, but the GDP's been a good result. Market sold off on the back of the RBA's raise of rates, and that was more to do with commodities, and the commodity picture is still quite weak. I'll show you that in a minute. Yes, the ISM services was quite strong for the US. We note that despite Canadians raising interest rates aggressively last night, the oil price, which got smashed, has had a bit of a bigger impact on the Canadian than raising interest rates. A bunch of talking heads out of the US, also very hawkish, saying that inflation's far too high, interest rates are going to go higher, and they're going to be there for longer, and we'll be going into recession for longer than most people realise. Despite that, stocks got bid, and bid heavily. And I'll show you that in a minute as well. But here we can see oil absolutely smashed. Gold did all right. Iron ore still down. Natural gas still down. Coal sort of holding steady. And we had a bit of a bounce in the commodity picture overnight, even though copper was pretty much closed unchanged. And what we're seeing there if we go and have a look at the Aussie pairs, it's Euro's outperforming it. The pound did outperform it briefly, but the Aussie sort of, you'd almost call that a double bottom here at around the 67 mark. Yen is weaker than the Aussie, Kiwi stronger, trying to bounce against the Sing, and it's stronger than the CAD. The CAD and the Yen were the kind of the weakest pairs. If we're going to have a look at the CAD, despite their raise in rates, the CAD was not as weak as the Yen. The Yen's a terrible, performing terribly, but the CAD weaker against most of its pairs there, as oil had a larger impact than rising interest rates. I mentioned the other day that the further you get away from the moving averages, and when you're sort of overheated, then you need to be careful about sort of jumping on the bandwagon of buying. And clearly the US dollar overnight weakened. Also we saw the 10-year bonds have a bit of a pullback on their time frame. I wouldn't read too much into that. This long-term trend on the 4-hour here is well in place, as we can see on the daily. It's just natural to have a retracement. But the crazy stuff was in stocks, despite the fact that globally the global economy is heading into a recession. Certainly the US is. Stocks had a very aggressive day. And I don't think we've seen the bottom. A lot of smart people are saying we haven't seen the bottom, but the market just got bid, and bid aggressively in the US. So crazy stuff, but couldn't get through the 4,000. Be interesting to see if it can. But I would be looking to fade this, any rally, a relief rally, or what they call a bear market rally. Looking for opportunities to sell it, rather than jump on the bandwagon thinking, oh, this is a good buy opportunity. I don't think it is. And coming back to the majors, I would expect these cycles to continue as long as the US is in a rate raising environment, and there is stocks continue to weaken. You'll have that US dollar continue to strengthen, and so look for opportunities to fade. Something like the euro. The pound certainly needs to have a retracement back up to around this level here. Around here would be good to get short the pound, and the euro around these two lines here, just over 1.01. Right, yeah, that's it for the day, guys. See you next time.